promise you, you are going to learn a lot in this video. All the Jasmy lovers, Jasmy's been a popular one on the channel over the last couple of months. We're going to describe what is Jasmy, how is the network been pushing and pumping for the last few months without having that pullback. Is that pullback likely to happen? More importantly, guys, I'm going to teach you my accumulation to distribution strategy, how you can accumulate at lower levels, distribute at high levels, but more importantly, how you know where the support is, how you know where the resistance is, and you're going to do it along with me. We're doing it together. It's interactive. And I'll tell you something, TradingView's free. Utilize this free tool. Follow me along because this one is going to be one that is going to give you the edge in the crypto market. This is Jasmy. Let's dive in. I think it's important to go through this process, understanding what it is exactly that you're invested in, what's the utility behind it, what fundamental news has been driving it recently, what partnerships are going on. So we're going to start here. The key benefits of the Jasmy Network. We'll start with decentralization, and of course that eliminates central authority, it reduces censorship and data manipulation risks. So far as the security is concerned, it utilizes advanced cryptographic techniques, making the network highly resistant to hacking and to fraud. Then the transparency layer. All transactions are recorded on a public immutable ledger, enhancing trust amongst its users. Then, of course, the smart contract capability. It automates and enforces agreements without any intermediaries, reducing disputes and operational costs. That's the trustless element. Then the efficiency, where it streamlines operations by automating processes, reducing the need for intermediaries. And then, of course, interoperability is compatible with other blockchain networks, fostering a connected and collaborative ecosystem. So it's not... Before we get into the charts, I want to tie this video in with how fundamentals and how technicals go hand in hand, how fundamental analysis can drive technical analysis, drive price to the upside. So Jasmy Coin pumped on rumors. Remember, rumors that the cryptocurrency is partnered with smartphone giant Apple. So first and foremost, they had the news of the Panasonic deal. We're going to talk about that very shortly. This is the recent narrative that they're driving, the partnership with smartphone Apple. It doesn't get much bigger than that. That's created a buzz in the Jasmy community. So what happens when you get fundamental news that's positive, and how does that impact the technical price chart? We're going to look at that very shortly. In March 2024, the project announced a partnership with Panasonic. So this is a couple of months ago. Jasmy and Panasonic Advanced Technology begin collaboration to develop IoT platform. They're going to spend 3 to 6 months building a platform that ties in with Personal Data Locker, which is a decentralized DB, to the IoT. And this allows device information to be attributed to individuals. So this is the news. This is the partnerships that's going on. One's a rumor, one's happening. How did this impact the price chart? This is how it impacted the price chart. You can see we've got the Panasonic deal, which pushed price to the upside. We started to pull back. I was getting interested in this pullback, but I wanted a break and I wanted a retest. What happened? Straight through resistance. Now we need another pullback. So this is the power of partnerships. This is the power of rumors, and this is the power of deals. You hear the thing, or you hear the saying, buy the rumor, sell the news. Why do you buy the rumor and sell the news? During the rumor, there's not as many people that know about it. We don't know that it's going to happen. It's going to be more speculative. And when the price pumps, it needs to reverse back down to where it needs to be. When you think of a rumor, when you think of a narrative, it could be in the newspaper, it could be on the internet. People know about it. People are interested. It's at the top of people's minds. People want to buy it. People want to make money. So it pumps the price and it pumps the price and it pumps the price until we reverse back to the mean. So I'm waiting for price to reverse back to its previous resistance, to flip support, and I'm going to show you exactly where my entry point is going to be very shortly. We're going to go through a strategy of accumulation and distribution, how you can apply this to your chart and how you can understand exactly what is fair value. Because guys, understanding a price chart, let me tell you that, it's one of the most important things that you're ever going to do in life. It's one of the most important things that I've done in life. You don't need to be a technical analyst. You don't need to be a trader. I promise you that. Just understand how a price chart works. Understand whether something's overbought. Understand whether something's oversold. And I'm going to show you very shortly exactly how you can do that simply on your chart. Trade and View is free. There's a free version of Trade and View. Just take a couple of hours out, understand how you do it, and I promise it'll give you an edge with your investments going forward. You don't want to be buying resistance, you want to be buying support. So how do you know what's support and how do you know what's resistance? And before we get into the accumulation, the distribution strategy, before I show you exactly how you can get an edge within crypto, first and foremost, we've got a couple of partnerships to discuss ourselves. This is my friend Jellicoe from Crypto Grit. I've known Jellicoe for a couple of years. He's an amazing guy. And he's very good at complementing my charts within crypto because they add additional value where we can bring the narrative together to get an overall greater picture. But one thing this guy's good at is crypto gaming. He's the man for crypto gaming, and you want to see the rankings that this guy does in a short period of time. So he specializes in that. He's got a new channel specializing in gaming very shortly. And the idea of bringing Jellicoe on board is so we can just add that additional value. If there's things that I don't know, if there's things that I can learn from, and there's people that I can learn from, and in turn people that you guys can learn from, then I'm all up for that. So we're going to be working more closely with Jellicoe and also Brandon, the boring passive income guy. Check out his YouTube channel. Check out Jellicoe's YouTube channel. This is the other one that I'm going to be working with, is my friend Brandon. And Brandon teaches people that there's more to the 9 to 5 grind. He teaches people that you don't need a boss. You can sit at home, you might have a family, and you can generate passive income easily and earn more than what you would on the 9 to 5 grind. He's done it himself. He's got his dream home. He was successful in 2021. This is the man that can teach you as far as passive income's concerned. So we're going to be working more closely with Brandon. I'm going to be working more closely with Jellicoe. We're going to be creating a group that's going to be more beneficial for you guys. And we're going to go through this strategy step by step together. Please, guys, just pause this video, get yourself on the free Trade and View. It doesn't cost you anything. I'm not affiliated with Trade and View, but understanding this price chart and understanding accumulation and distribution is going to be one of the most powerful things, because we say we don't buy resistance, we only buy support. So how do we know what's support and how do we know what's resistance? I'm going to show you very simply. So get your Trade and View chart up. Let's clear this mess on here. Remove all those drawings. So first and foremost, I've gone out. I'm on the 3-day chart. We've got nothing on the chart. And what we're going to do is go to the top here and you'll see you've got variations of different things. You've got hollow candles. You've got all sorts of different candles. The one that we're going to use is the step line. So if you add in the step line on there, it's going to look a little bit something like this. Now, all we're doing now, guys, is we're joining the dots, and that's going to tell us what's support and what's resistance. And you'll hear the words accumulation and you hear the words distribute. If you can accumulate at support and you can distribute at resistance and you can understand what trend you're in, then you have got the biggest edge in the market from an investment perspective. So what we're going to do is we're going to join the dots. We're going to build in our support levels and we're going to build in our resistance levels. What it tells us to do is if we're wrong and price drops below our support, where is the next support going to be? Where is the next area that price is likely to stick? This is going to show you that. So the next thing that we're going to do is we're going to go on to our horizontal ray. So we're going to pull up the horizontal ray and we're going to be joining some dots. Where's the sticking points on here? We'll start off at the bottom. You can see this is the bottom, this is the base. We've had 1, 2, 3, 4, slightly drop below, confirmed 5. We know that that's going to be a strong support zone. That's the bottom, that's the bear market low. That's where we'd expect price to drop if we had a macro swan event. If we had a black swan event, this is the worst case scenario we would expect Jasmy to drop. So let's build in some more lines and see if we can get any kind of thesis as to where our next support and resistance lines are going to be. What about this? You've got 1 here, you've got 2, resistance 3, resistance 4, it's come back down. We would expect that to act as support if we drop this next support zone. So we're going to keep building these in. We're going to keep building these in. Do you understand what I'm saying? How many dots? How many times has it touched it? It's touched it once here. We've come back down. We fell through. What happens the next time? It was support, comes back through, resistance until it flips through and acts as support again. You can see what's happened in the past is likely to happen in the future. Markets rhyme, they never repeat. So you need to look at past data to expect what kind of sticking points that we're likely to get. We're going to keep doing this. So let's keep building it in. We've got this area here. That is a strong area. And why is this a strong area? Because this is the area we're expecting price to pull back to now. This is the area where we're going to be interested in. So we keep building it in and we keep building it in. And now what we're doing, we're building in resistance zones. Why is this a resistance zone? Because price action has come back up, it's touched it for the second time, it's reacted from there, and we know that this is resistance because it was resistance here. What happened here? We put in a lower high, price action went down, we carried on, we made a bear market low until we made that sideways base, the accumulation phase. This is where the accumulation phase begins. This period here is not a short amount of time. This period here is 487 days in this accumulation period, 487 days in a sideways range before ultimately you get the Panasonic news and then you get the Apple news, and look what happens to price. So we can build in a couple of shorter areas here. We've got this. This is going to be weak support. Why is that going to be weak support? Because we've had a rejection once and only once. So you'd expect price to come back there, hopefully hold support there. And if it does hold support, that would be an accumulation point. So we'll build some top levels in now. And you can see when we've got these kind of gaps here, these are the kind of gaps that you need to pay attention to, because once price action pushes through this level here, then this gap here, 62% to the upside. Once you've got a gap and you've got a lack of a build up of price action here, then price accelerates through to that point quite easily, because why is it? There's no resistance. This would have been our resistance. If we'd have had that build up of price action, we would have expected price to push through and then act as resistance at this point. Because we haven't had that build up of resistance, it's not resistance. So you expect an acceleration to the upside. So that would be a good trade for Jasmy. Once you've broken this level here, which is sitting at 0.039960, once you've broken through here and that's acted as support, then you've got a 62% move to the upside without any resistance. So this is why it's important to build in these areas, accumulate and distribute. What happens when you get there? Is that an accumulation level? No, it's a distribution level. Above price action is distribution, below price action is accumulation. Accumulation support, distribution is resistance. So we can get rid of that, and then we can build in some higher levels from the previous bull run. So let's put this on here. We've got one there, we've got 1 touch, 2 touch, 3 touches there. We can keep building these in. We've got a couple here. You can see where these acceleration points are going to be. You've got this acceleration point here, that's even bigger, all the way up here. Once Jasmy, and this is going to be alt season, this is going to be during the bull run, once Jasmy breaks 0.086268, you've got pumping price action all the way to 17 cents. And then we'll stick one here at the all-time high. All-time highs always act as resistance. So we've got our areas built in. I hope you followed me with this. And if you do like this kind of tutorials, if you do like mixing technical analysis with fundamental news, with price action, let me know in the comments, because I've enjoyed doing this one. So if you want more of this, let me know and I'm happy to do so. And don't forget, guys, subscribe to the channel, subscribe. Right, okay, so we've got our support levels built in, we've got our resistance levels built in. One thing that you can do to know if you're holding support, if you're holding resistance, one thing that I like to do is just add in colors. Resistance colors are red, build them in. Resistance colors are red. Support colors are green. So we stick them in red, and then we've got our support colors. Let's just build them in quickly. It just helps you identify when you've lost certain levels. Once you've lost a certain level that was support, you've got to act as resistance going forward. So you just change the color to red. So keep putting these in. 2 more. Keep putting these in. And then the last one. Here we go. So it is as simple as that. We know what's support and we know what's resistance now. What we can do is just go back to the top and we can put in our candles, our standard candles, and you can see how price is coinciding with these levels. Why did we use the line chart? Because the line represents the close of the day. You can see it represents the close of the day by things like this. You've got these wicks here. What do wicks mean? What does it mean once you've got a wick? It means price action has tried to push through this level. This level we know is resistance. We've built in our resistance level, and what's happened? Price action is rejected. We haven't had a candle close above, and then we've pushed down, creating that lower high. You see why it's important to go onto the line chart. Let me show you some examples here. That was an extreme wick. If we were on the bar chart, at some point, the candle would have went all the way to the top here. That would have caused confusion. That would have caused emotions. By adding the line chart, you know where the candle close is. This is the area that's going to act as resistance. This is not the area that's going to act as resistance. So what happens? What happens when we come back through and test it again? You can see you've got the wick, you've got the wick. So the closes are important, and that's why we use the bar chart. So what's happening now as far as distribution and accumulation is concerned? I want you to answer that question yourself. Shout it at the screen. What are we on? Are we on resistance? Are we on support? We've built in our lines. We know we're at support. So this is a support zone. Now, how can you use this even more to your advantage? By laddering in your position. Be prepared for being wrong. So if you're investing and you've got $1,000 to invest, why not invest $50 at this point here? If you drop this area here, I'm expecting to drop this area here, guys. I'm expecting to test this previous long resistance, which was resistance for, have a look. It was resistance for 87 days, 87 days of resistance. I want that to flip support, and I want that to act as confirmation. So if you are DCAing, a little amount here, just in case price action flips from here, I expect it to still come back and test 24 cents. The previous resistance level, I want to flip support. So at 24 cents or 25 cents, this is where I'm going to start heavily laddering my position in even further. I'm not going to put all of it in there. What happens if I put all of it in there and price action reverses? It means I've lost opportunities at cheaper prices. So from an investment perspective, these are the areas that I'm interested in. Support. If you hold support, go to resistance, you can offset 20%. What happens if you reject? You come back down, support. You can add that 20% at a lower level. If you drop this, what happens? You can add that support, bring your average down. This is how it's a powerful tool, guys. Don't put all your eggs in one basket, and certainly don't put everything into one altcoin. You need to split it, split your positions, understand how much capital that you've got for each specific coin, and then split the risk accordingly. You need to prepare more times for when you're wrong than when you're right. So from a trading perspective, you're using stop losses. From an investment perspective and building your position, this accumulation and distribution strategy works amazing. If you're offloading here and then you're accumulating here, that means that you're gaining. You can use the same amount of capital, you can get more coins, and you can just ride it and ride it. If you're in a sideways range, ride it and ride it. And all you're doing is just compounding. If you break through, you're waiting for the retest, add to it. But what you're doing is you're just building on your position and building on your position and building on your position. You're accumulating, you're distributing. And what happens if you can't fill your position? Then that's just the game, guys. If you can't fill your position, that means you've got more capital to find elsewhere. There's thousands of altcoins out there, so you can analyze and assess using this method, and then you can use that capital elsewhere, because things don't always go right. And that's what we've got a plan for. You're not just going to keep going down, accumulating, distributing at the tops, accumulating at the bottoms. It doesn't work like that. So you need to prepare for all scenarios. And by laddering your position at strong support and laddering or distributing your position at resistance, that is a powerful thing. So if you did enjoy this video, guys, and you want more like this, subscribe to my channel. Let me know what it is that you want me to cover next, and I'll see you in the next one.